Warm weather is just around the corner, and so is home buying season. So I thought it'd be a timely topic to talk about where current mortgage rates are, maybe where they're headed and what's influencing those rates, and then obviously some rules of thumb about purchasing a home. Let's jump right in. On the date of this recording, mortgage rates have dropped below 6% for the first time in many years. So, how are rates determined? Well, they're not determined by the Fed. They're not determined by a political party in Washington, although both policies influence the environment. The rates are really set more by the bond market. And mortgage rates really tend to fall in line with the 10-year Treasury yield, which is more forward-looking into long-term inflation expectations. So this is why you've been able to see the Fed lower short-term rates, but the longer-term rates stay a little bit higher. So why is this? Well, bond markets hate uncertainty, and that's what we have a lot of right now. We have uncertainty around, one, trade and tariffs. We've got uncertainty around jobs, economic growth, the government staying open, and we could go on and on, right? So when we get a little bit more certainty around some of these areas, the rates should tend to come down. What does this mean for you? It means we can't control it. But unfortunately, this is one of the main drivers of home affordability, because if rates stay high, so does your payment. There are some things we can control though. How much house you buy, how much you put down. So let's look at a couple rules of thumb around buying a home. Let's start with a couple rules of thumb around your payment. Use no more than 28% of your gross income for your total housing payment. Your home price should roughly be about 3 times your gross income, and you should keep your total payment under 25% of your total take-home pay. Another rule of thumb around the down payment. You'll usually hear you need to put 20% down. Now, this is not always true. I can make an argument this can make you worse off in the short term. Now, why do people say that? Well, if you don't put 20% down, that means you're going to be paying PMI on your mortgage. What is PMI? It's basically an insurance policy that you pay for that protects the mortgage company if you default on your loan. But when you start comparing the cost of the PMI and the savings that you would have on your mortgage if you put that 20% down, it just doesn't make sense. You want to keep the liquidity. You may want to replenish savings. You invest the difference. Plus, as your home appreciates, you can request this PMI removal without refinancing. More often than not, I'm helping my clients put down what makes their cash flow work, then save or invest the rest strategically. Because rules of thumb are great, they're great starting points, but when you do a real financial plan, you can really see the dominoes of every decision that you make. I was just helping a couple with a plan that walked through them selling their current home and moving into a larger, more expensive home to have room for their expanding family. And we coordinated with their mortgage loan officer, walked through that plan to see the impact on the short-term cash flow impact and the long-term retirement and savings, college savings, retirement savings impact. And what it showed is that they should not put 20% down, and they should have a little bit of higher mortgage payment in the short term, but that they could pay off all their student loans, credit cards, medical debt, vehicle loan, replenish their savings, and maybe invest a little bit of the rest and give them some room in their cash flow to be able to do all of that. And so they have full confidence and clarity in how much home they should buy and how much they should put down. Life is unpredictable. Markets are unpredictable and rates are unpredictable. We can't control everything, but you can control your decisions and those that you surround yourself with to help you make those decisions. So if you're thinking about buying a home this spring, I'd be glad to help give you some clarity and confidence in how much home you should buy and how much you should put down. But not only that, I can also get you connected with some trusted real estate advisors and mortgage loan officers to guide you through one of the largest purchases you're ever going to make. Thank you for joining me for another episode of The Groundwork. Next week, we'll take a cue from St. Patrick, whose life wasn't really built around luck, to talk about why relying on luck in money doesn't work and how intention builds a real legacy. We'll see you then.